Okay, good evening, Sanbanan, everyone. I trust that you can hear me. My name is Zain Khan. I will be the host of these webinars. I've got my colleague, Kaya Zungu, who is my co-facilitator, and she will be assisting me through the process. In the background, we have Clive, our technical person, and we've got Crystal in the background, who's also helping us with any technical issues. And obviously she's, yes, our backup support. So I'm very honored to be here, and I'm very pleased to be part of this program, the Asisa Foundation, and of course, obviously it's the Build Up. So let's get to know a little bit about the Asisa Foundation. The Asisa Foundation is a non-profit organization that was founded by the Savings and Investment of South Africa. We were founded in 2013. And of course, we initiate and implement meaningful consumer financial literacy and education initiatives targeting South Africa's most vulnerable groups on behalf of the saving and investment industry. We have various programs, and I will go through some of them. Firstly, the WageWise program is a work-based program where the Asisa Foundation educates and trains employees at various work sites. Then there's Flame, which is a financial literacy and micro enterprise, obviously for the small businesses. Then you've got RTFE, which is retirement trustee education. And of course, L plus Earn. L plus Earn, on the other hand, focuses and targets the youth, that being young adults that are in TVET colleges and or in universities. And of course, there's Build Up, which is the one that we're currently on. And this is the one that we are going to be working through together. I'd like to call upon the chairperson, Delisile Nyanda. If Delisile, could you possibly do an introduction for us?
Good evening, everyone. Unfortunately, we don't have power this side. We load shedding, but I'll try. My name is Delisile Nyanda. I'm the chairperson of Indlovukazi Women's Financial Services Cooperative. I am the chairperson.
Thank you very much and welcome, Delisile. We are, yes, we are also load shedding. So if you see there's too much light on the air. Thank you very much for that. Nomalungelo Bengu.
Hi, Clark. Hi, Zain. Sorry. Nomalungelo has a bit of a challenge with load shedding. However, Nomalungelo is our chairperson of education committee, but okay. I have the person that you had was the correct person. Nomalungelo would have introduced Mrs. Delisile Nyanda, who is the chairperson of Indlovukazi. So she is the correct person that's introducing Indlovukazi.
Okay, thank you very much, Zanele. Okay, so ladies, without further ado, let's continue or let's proceed with our program. So again, to those of you that have just joined us, welcome and thank you very much for being here. Is Nomalungelo back in? Can we open the floor to her?
Finally here. Network today is showing me serious flames because of load shedding. We switched to generator, but it seems like the towers around the area are also done, hence the connectivity being a problem. I really apologize.
Okay, thank you very much. So again, ladies, welcome and thank you very much for being here. You know, this webinar, the first webinar, obviously what we're talking about today is planning with money. Now, when it comes to money, I think we all know that every single one of us at some point in time has had issues when it comes to planning. You know, there are two things, there are two key factors when it comes to planning with money. And the firstly is budgeting. And secondly, it is to differentiate between a need and a want. Now, I like what the saying says, a budget is telling you that, telling your money where to go instead of wondering where it went. And I'm sure we all have at some point in time asked ourselves, or maybe made a comment, because I don't know what I've done with it. So we've often had those kind of comments and or we've made those comments ourselves. Now, when you think with financial management, simply put, is a journey that we take with our monies from one payday to the next. And often we find ourselves in situations where we come across stumbling blocks. And when we come across these stumbling blocks, obviously we don't have a plan in place to deal with those issues or those stumbling blocks that we actually come across. And which is why this webinar is so important to us, in the sense that we need to start planning with our monies and making sure and knowing where it is going. So the first step obviously would be to differentiate between a need and a want. Now, us as individuals, we have a different needs. Each one of us has different circumstances and we have different needs. So your first step before one actually starts budgeting is to differentiate between a need and a want. As I said, us as individuals have different circumstances and we have different needs. Our needs and wants differ from one person to the next. For example, I may need Wi-Fi, where somebody else may say, hey, I don't need Wi-Fi, I need data. When we budget, it's also important that we prioritize our needs. And of course, after we have prioritized our needs, we then, if possible, take care of some of the wants, okay? There's also the issue of advertising and peer pressure. Now, every single one of us at some point in time has been attracted to some kind of adverts or whatever we see on social media. And of course, we always just want to buy it, okay? And we want everything we wanted now, okay? The question to ask is always, do I actually need this or do I want it? Is it essential? How much do I need it, okay? And that is the first thing that we need to consider, and that is to differentiate between our needs and our wants. And as I said, every single one of us has got a different need and a different want, okay? Now, if you're looking at the screen right now, you've got a cell phone and we've got a fancy cell phone. And the question to ask here is, what is my need? Do I need a cell phone merely for communication and to serve the purposes that I want it to serve, or do I actually want a fancy cell phone? And that is something we need to ask ourselves, and to be in a position to basically answer that and say, hey, is this what I want? Do I need this fancy cell phone, or do I need one just to serve the purposes of whether it's a WhatsApp or social media or emails, whatever? And if you look at the next picture, here's another one. It says gym membership. And of course, there's a person above that that's doing yoga at home. So again, the question to ask is, yes, I know that my body needs to exercise and I need to exercise. I need to keep fit, okay? And the question to ask here is, do I need a gym membership, or could I use my surroundings? Could I use my home to basically do exercise? I know that I need to exercise, okay? And I know that my body needs it. But again, ask yourself this question: do I need this gym membership, or can I actually do it at home? Do I have equipment, or do I have things at home that I can use to basically get the exercise that I need or that I want? So, again, it goes back to asking oneself if we need this or we want it. And once we've actually prioritized our needs, our next step would be to go into budgeting. So when you think about a budget, firstly, it creates a picture of how you are spending your money. It gives you this picture and it tells you exactly where your money is going to. Secondly, it is a discipline and a skill of keeping track and planning, all right? It does take discipline, and it means, and of course, yes, it is a skill of keeping track. It's a management tool. Most importantly, it is a management tool in which we use to assess our spending behavior. So this is not just a piece of paper that we make notes to remind us of what we are doing with our monies, but it is a management tool that we use, which means that we can always go back to it and make the necessary adjustments. For example, if we've done our budget and you find that we are spending a little too much on certain items, we can always go back and make that adjustment. And lastly, of course, we cannot build towards our financial goals if we do not have a plan in place. Now, always budget before we receive our money. In fact, I would say we should be doing our budgets at least 2 days before we receive our income, not on the day that we receive it. Doing it at least 2 days or a few days prior to it, you have the opportunity and you have time in which to go back and make those changes and reassess them. And of course, budget regularly. It's not a once-off exercise. It's something that we need to do every single time the money comes in, whether we get paid on a weekly basis, on a monthly basis. In fact, we should have a budget in place for every time we receive money, okay? And the other thing would be to include all sources of income. For many of us in some of our households, we have different sources of income. You know, for example, maybe we have Ukoko that is living with us and she contributes from her grant towards the household income. And if that is the case, then it's important that we actually use that money and of course, include that money in the budget, okay? And as I said earlier on, it's critical that we actually budget for our needs first, followed by our wants. Often we find ourselves in a situation where we've, you know, kind of forgotten about the needs and focused on the nice to haves. And then we find that we do not have sufficient money to take care of our needs. You know, when you think about it, we have fixed expenses. Fixed expenses are constant. And some of those fixed expenses are examples. It could be a bond repayment or car repayment. Those are fixed expenses and those would never change. And variable expenses are the one that can be adjusted. And those variable expenses are obviously our consumables, our electricity bill, our groceries, our cell phone, airtime, data. Those are the things that we can actually use to adjust, okay? And most importantly, ladies, and it's vitally important that we include savings in our budget. And that being saving towards a goal, and of course, emergencies. As I said earlier on, you know, we are on this journey and things happen, life happens. We don't know what is going to happen along that way. So it's important that we have a certain amount of money to actually take care of that emergency that we, or that stumbling block that we're going to come across. And of course, for our goals, as we're sitting here, every single one of us has got a goal. There are things that we want to achieve. There are things that we'd like to have in the future. So it's important that we have a plan in place for that. In fact, when you think about it, saving should be the first line item on any given budget. Because if you think about it, you know, you ask yourself this question, is saving a need or a want? The answer would be a need. And obviously with it being a need, it should therefore be the first line item on our budget. And, you know, if you find that you need to make adjustments, the first place to start making adjustments would be variable expenses. And that is cutting down on our wants, all right? So, you know, when I spoke about savings earlier on, you know, I think it's very important that we actually consider automating our savings. And by automating our savings, I'm saying that we should be in a position to basically walk into a bank and maybe instruct the bank to put in a stop order and or a debit order, where by doing it that way, we don't miss that money. We're not going to miss that money in any way because it is money that we don't see. It's not passing through our fingers, so we actually don't miss it. And I would recommend, and I will highly suggest that we either arrange a stop order and or debit order, or even use scheduled payment on our banking account app. So stop order is basically where you walk into a bank and you instruct the bank to take the money from your account and transfer it into a savings account. On the other hand, we have a debit order, and the debit order where we enter into an agreement wherein obviously we are giving the bank this permission to basically deduct certain amount of monies from our account, from our bank accounts, obviously, and put it into a savings account. So yes, I would say that, you know, I think it's very important that we consider automating this process, because in so doing that, as I said earlier on, we won't miss this money because we won't see it. It will basically come into the account and it's gone. So obviously, yes, we won't miss it. Now, you know, I often get asked, Zane, so yeah, we've spoken about savings and it's important for us to save. Now, where do I find the money to save? Yeah, everyone asks that question. And I would say, you know, the first step would be to basically review one's needs and wants and only spend on essentials, and obviously check spendings on little things like takeaways, you know, look at that and say, hey, how much money am I spending on takeaways, and start reviewing that and minimize that, okay? And the other thing would be to consider maybe reviewing subscriptions and or club memberships, okay? You know, we all have these accounts at various stores, and of course, most of them come with club memberships, and actually ask oneself, you know, do I need this club membership? You know, how much value does it add to my life? You know, consider that. You know, another simple thing, I'm going to use an example like pay TV, you know, look at the different channels that you have, look at the ones that you enjoy, and then consider, hey, making the necessary changes. You know, there's nothing wrong with basically dropping from a premium channel to a channel that is more affordable to you as an individual. It's you that knows what you want to watch, and you know that know how much you can afford to that. And the other thing is that, you know, if one receives a lump sum, whether it's from a stokvel or a bonus payment, or hey, you may have won a certain amount of money in a competition or whatever, you know, if that lump sum comes in, and when it does come in, I would seriously consider putting a certain portion thereof into a savings account, okay? So it's important that we actually think about this. And the other thing is, you know, as we're sitting here, every single one of us has got some kind of addictive spending habit. And these addictive spending habits could be anything from eating a chocolate every day, to smoking, to alcohol, to having takeaways every day. Every single one of us is guilty, you know, and I think it's important that we actually identify those. And, you know, once we've identified that, I'm not saying don't, you know, eat a chocolate. I mean, if you find that we are eating chocolate every day, you know, maybe consider minimizing it to 3 a day or 2 a day. So each one of us has got this addictive spending habit, and I would say, you know, there's another way of looking at how and where I can find this money to save. So as I said earlier on, I'm not here to say don't eat chocolates or don't eat anything that it is that you buy on a regular basis, or don't smoke or don't drink or anything. But the important thing is to identify that addictive spending habit and reduce that intake or minimize your expenses on that item. Okay. Now, you know, earlier on, I mentioned emergencies and stumbling blocks, and life happens, things happen. Every single one of us has got an emergency, and often, you know, the only 2 emergencies we often think about, and that is illness and or death. Yes, it is vitally important that we have a certain amount of money, or we make provision for those emergencies. Those are the 2 largest emergencies that we need to take care of. But then on the other hand, there's everything else that happens in our life every single day that we actually need to make provision for, and we actually don't think about it. You know, a simple thing like an unexpected guest arrives and stays for a while, and as a result, the food bill increases, because now all of a sudden we have this extra person, and we need to, you know, make sure that this person is fed, and of course their food bill increases, you know. And if you think about it, the other thing is a simple thing like an increase in the petrol price, which we've all just gone through now about a week ago. So the increase in petrol price, and obviously, yes, we haven't made provision for that. And all of a sudden we need to find this amount of money to basically fill, you know, our cars with fuel. So it's those little things that happen. Another thing is you could be waiting for a payment, you know, it could be an invoice that is outstanding, or, you know, someone owes you money or something like that, but there's a delay, and you need this 1,000 rand for food and or transport while you wait, you know. So it's those little things. And an appliance, another thing is that an appliance in the household, we don't think about it. And often we find, the geyser bursts or the fridge packs up, the microwave. It's those little things that also need to be taken care of. So, in our savings, yes, it's important to be saving towards our goal, but also we need to consider these emergencies, because these emergencies happen all day, every day in our lives, okay? And it's vitally important that we actually have a certain percentage, of our income that's actually kept aside to take care of that. So ladies, yes, please consider saving A, towards your goal, and B, towards your emergencies. And as I said, savings should be the number one line item on your budget. And when you think about, so you ask yourself this question, so where do I find this budgeting tools? There are many tools that you can use, and you can use a simple thing like a piece of pen and paper, okay? And write everything down, be systematic, see the numbers and get things into perspective. And that is what creates that picture for you. And that is what tells you where your money is going. That is what's going to say, hey, I'm overspending here and I need to make changes there. Or I've got a little bit more, I can actually increase that. So, again, using that budget to manage your monies, and simple things, as I said, a pen and a piece of paper. Alternatively, a simple budgeting template, all right? It can either be an Excel-based or a PDF. You can refer, if I will be giving you our website address, and we have these tools on our website as well. So at any point in time, you can access our website and you have access to these tools, either an Excel-based spreadsheet, or you can use a simple PDF file that you can use. Alternatively, you can find budgeting apps on your phone or at your bank or any financial institution. So it's not a matter of, I don't have access to budgeting tools. And yeah, it's very simple to obtain. As I said, you can download it from our website, you can download it, or you can get it on a budgeting, you can use a budgeting app that either from your bank or your financial institution, but it's important that you actually use a budgeting template, or as I said, even if it's just a piece of pen and paper, because that's what's going to tell you where your money is actually going to, and it's going to put things for you in perspective. Now, ladies, before I move on to communicating with money, I would like to maybe take a question or two on anything that I've just spoken about, be it on needs and wants and or on budgeting. If you have a question, unmute yourself, ask the question, and I would be happy to answer those questions for you. Alternatively, you can raise the question on the chat, and later on when we go through Q&A, we will be in a position to answer some of those questions for you.
Hi, it's Vilepi Manzini. I wanted to find out what are the correct proportions in terms of budgeting and percentage of items on your budget.
Thank you very much for that. That is a brilliant question. And you know what? I'm not going to attempt to answer that right now. However, in next week's webinar, when we're doing saving and investment, we have a financial planner. And I would like to, if you don't mind, I would like us to make a note of that question. And obviously, I would like that question to be asked by our financial planner. But thank you very much for that. I do appreciate it. And it's a very, very valid question. And I would like to hear, our financial planner would obviously be hosting the session with myself, and she would be able to give us a little more information on that. Okay, I see there are three participants that have raised their hands.
Hi, I'm Lindy Wekwele. Thank you so much for a very insightful presentation. I think mine is related to the previous question, so perhaps I should be waiting for the financial planner, because I also wanted to know from a savings perspective, the proposal made as well. And also looking at the COVID and the implication of COVID in relation to people's savings, spending, pertinent, the likes, how to ensure financial resiliency, beyond this, considering that other people were even tempted to tap into their reserves, just to get by. I think we're all suffering from the same plight, but how do we ensure resiliency so that we can take care of tomorrow for the sake of our children? So I was interested in that perspective. Thank you so much.
Okay. Thank you very much. Again, as I said, a brilliant question, and totally, I mean, if anything, COVID has taught every single one of us a lesson in that we did not make provision for emergencies, and many people have lost jobs, many people have lost businesses, many people have lost income. And of course, yes, the question to ask now is what percentage do I save? Where do I find this money? And, it's easy. I mean, every single one of us, or, certain experts would say you go for the rule of 70, 20, 10. Someone else would say 50, 20, 30. But when you think about it realistically, each individual circumstances is very different. So for me to say, hey, I think you need to put X percentage, into this kind of investment, or X percentage. So, which is why I'm saying that I would much rather, us wait for next week. And yes, let's hear it from our financial planners. So again, thank you very, very much for that question. It was a brilliant question, and it's something that we will most certainly be addressing in our next webinar, which is next week, Tuesday. Is there any other question?
All right, thanks, Zane. You're speaking to Mfundo. I don't know if my question would also need to be attended to next week, but looking at the current situation, if you can just shed light, taking advantage, savings versus paying off your debts quicker, taking advantage of the decline in interest rates and so forth. And obviously there are a couple of components that are involved in the process. When you look at the interest rates received versus the interest rate payments, what would your take be on a more, let's say, for example, because you also get other types of, let's say, looking at maybe the crowd, the participants, let's say, for argument's sake, business people, where you pay off your equipment quicker versus savings. So it's basically your savings versus your settlement of debt, and you find some other, for example, when you look at your home loan, let's say, for argument's sake, your home loan is for 30 years or 20 years, but at the rate that you are paying, you might take it down to 10 years. And with the flexibility of the amount that you've paid over, using that amount on a urgent need basis, where the bank can reverse that amount that you've paid extra and increase your term loan or whatever the case may be. Maybe if you could just speak to those points, taking advantage of the decline in repo rates and the interest rate. Thank you.
Right. Thank you very much, Luyan. Thank you very much for that. Again, as I said, a great question. And I'd like us to park that question for next week. As we go along, we will obviously be sharing tips on where and how to basically, make money a little more liquid in terms of, to be able to, reduce expenses, and like a simple thing like identifying one's addictive spending habits and maybe taking a percentage thereof and putting it towards saving. And then when we deal with debt and how to manage or debt repayments and how credit and debt repayments in webinar 4, again, we will be discussing, issues surrounding how we can actually pay off our debt. And obviously we would be giving tips in that webinar. So I'm grateful and I'm very, very thankful for those questions. They are brilliant questions, but I would like to basically park them for our upcoming webinars. All right, so ladies and gentlemen, now when we get to this point of communicating about money, money is a very sensitive thing. It's something that we don't like talking about. None of us like talking about it. And you find that we just don't like talking to our loved ones. We don't like talking to our families. We tend to keep these things to ourselves. We tend to do our budgets ourselves. Now, you know, on your screen here, you're looking at the different styles of communicating. There's passive, there's assertive, and there's aggressive. And, you know, every single one of us has got different traits, and we deal with certain discussions, and especially when it comes to money, we deal with them very differently. You know, simply put, passive would be, I'm gonna use a simple example, like a creditor makes a phone call. You know, creditor makes a phone call, and we kind of choose not to take that call. You know, it's a private number call or an unidentified number call, and we choose not to take that call. You know, that means we are passive. We're not wanting to basically address the issue at hand. So obviously, yes, we ignore that creditor. And then on the other hand, we've got aggressive. Aggressive is, you know, and I think for many of us at some point in our time, in our lives, we have had an argument and or disagreement about money with whoever. Okay, it's normal, because as human beings, obviously, yes, we you know, communicate, and we deal with communications differently. But when it comes to money, as I said, you know, we need to start thinking about assertive communication. And when you think about assertive communication, firstly, it enables you to take responsibility of what you are thinking, feeling, and needing. For example, when that call comes in from that creditor, you know exactly what you are thinking, you know how you are feeling, and you know what it is that you need. So you are in a position to better negotiate with that creditor, you know, and make a payment arrangement or whatever. But it's also being done in a very, it's respectful of you and respectful towards others, okay? I mean, hey, those creditors are calling, they're doing their job, they have a certain job that they have to, or job function that they have to carry out. And so obviously, yes, you know, engage in discussion, but be proactive and be respectful. And when you think about it, it provides equal opportunity to negotiate, whether it's with a creditor or whether it's with a family member at home or whoever. But it's a win-win situation for everyone. You know, when I said earlier on, when we do our budgets as well, when we doing our budgets, we should be doing our budgets with our loved ones, with our families, okay? And in so doing, we are also in that position to basically allow them to be heard as well. Okay, and it also enables for constructive resolution and or misunderstanding and or conflict, basically. So, you know, as I said, instead of shying away from that phone call that comes in from a creditor, I would recommend, you know, why wait for that phone call? Rather pick up the phone and you call them before they call you. So, you know, when it comes to communicating, as I said, you know, money is a sensitive issue, and we actually don't like talking about it at all. But, you know, think about it. And I would say, you know, the next time you have a discussion with whoever, ask yourself about money, you know, ask yourself this question: am I being aggressive, passive, or assertive? So, you know, if anything, communicating about money is a skill. And I think, you know, we should be in a position to start communicating a little more assertively, okay? And, you know, with that being said, I'd like to basically ask if there are any questions at all on what I've spoken about money, or maybe, hey, share an experience with us of some sort about communicating with money, or maybe how do you deal with, you know, an issue that surrounds money or finances in the household, in the business, whatever. If you've got a question, again, raise your hand and we will then allow you to ask the question. Anyone? I don't see any hands. So that tells me that everyone talks about their finances, and everyone includes everyone in their financial discussions at home, which is wonderful. And I'm glad, because I don't see any questions. But, you know, it all boils down to, as I said, it all boils down to being open, being honest, and ultimately, you know, talking about that money helps you. It relieves a lot of that financial burden and that financial stress. And a simple thing, like, as I said, you know, when you're doing your budget, do your budgets with your family. So You know, you shouldn't be doing your budget on your own. Many of us, we have people that are financially reliant on us. They have different needs. And, you know, if we are the sole breadwinners or the sole providers in the household, it's important that we also understand what their needs are, you know, and be in a position. And it also, it reduces those unrealistic demands that our loved ones and our kids and our family members make. And often, you know, they will continue to make all those unrealistic demands. It's because they don't know. All they know is, uZen uya emsebenzini uyahola. And then, oh, okay, uZen funeka nginikeza lokhu or unginikeza lokhu. But if they don't know what percentage of my salary is going towards their well-being, you know, they're going to continue making that unrealistic demand. But then on the other hand, you know, them communicating with them and including them in that budget discussion, you know, they might surprise us and they might be in a position to come up with ideas as to how we can basically go around stretching the little amount that we have to basically take care of everyone's needs in the household. So before we move on to our next topic of discussion, I see Nonhlanhla, thank you very much. I see Nonhlanhla has raised her hands. Your question, Nonhlanhla?
I'm just checking, Zane, because there is a teaching that most of us were taught, not basically me, it's a general teaching that we were taught. When you get married and you start doing your budgeting, there must be money that you hide away so that your husband does not know about that money. You keep it somewhere with maybe your maiden surname. So if we're saying engage fully with your budgeting, because you will see when you sit down and then you do budgeting and there's this 1,000 or 500 rand that goes to this account that is not known inside your home. I know the importance of sharing everything, but what is your take with that concept? Because it's a concept that has been instilled in ladies. Thank you.
Right, thank you very much. I totally hear that and I totally agree with you. And my colleague Kaya has just given me an indication that she would like to answer that question for you. So Kaya, if you would like to just join me here and answer that question.
Hi, everybody. That is actually a very valid question. And it goes, you know, money actually takes you beyond just what it is, the commodity. It takes you on how you handle relationships. So to me, what it means is that if I am hiding money from my husband, there is an issue there of actually in the relationship now, not necessarily about money. There's an issue in the relationship that we are not open enough with each other. So there's an issue of trust that I'm not comfortable with how he's managing money, but I'm also not bold or brave enough to address that with him. I don't know whether I am answering you. So it goes beyond just money management. It's now about how we relate to each other.
I just wanted that to be out. Yeah, yes, Kaya, I'm with you. I totally agree with you. Hence, I wanted this subject to be there because it's one of the things, even when you go for the bridal showers, as much as I don't agree with it, because from my side as well, it's like you have to be open. You can't have, and then all of a sudden, you've got 5,000 that comes from nowhere, you know, and you put it on the table. But it's a concept that has been going around with the ladies to say, put away, you must have an account that is even written in your name that he does not know about it. So, you know, to put. So when we're saying budgeting, we sit down, all of us, you know, thank you.
Yes. And actually that is very true. In fact, even in the women groups that you have on Facebook, on WhatsApp, it actually comes up a lot that, you know, we need to keep money, you know, separately and hide it from the husband. And those are actually symptoms of the relationship, that there are issues there. There are trust issues. There's a reality maybe that the husband does spend a lot and does not take any advice from anybody, does not listen to other people, the other person's opinion. So as somebody who is in the financial planning sphere, I wouldn't actually advise that we continue with that. I would advise that we actually look at the issue, look at why it is that you are not open with each other. So we need to actually consult professionals, sit with them and look at our relationship and say, because what can actually happen is that if I accumulate money that my husband does not know about, I will actually become selfish, isn't it, in the relationship? And it might actually endanger the relationship that we have. So I wouldn't advise it. I would say let's address the issues that we have, because there are underlying issues to that suggestion or to that thinking.
Thank you, Kaya. Thank you very much for that question. Again, a very, very valid question, and a little more about it perhaps maybe towards the end of the session.
Apologies, I think Zane could have dropped off.
Apologies all, the unexpected challenges of load shedding across the country. Are there any other questions or comments while we wait for Zane to get back on? This is Kuvi. Delisile, maybe I can answer your question as part of the live chat on the group, where you requested tools and templates for the members to be made available to help them with their budgeting, etc.
Yes.
Yeah, so just to let everybody know, is that we've set up a closed Facebook group, and that group we'll be able to share tools, we'll be able to have discussions, etc. And we'll also be looking to post and share more information on our website. So we'll share the links with all the members, etc., so that you will have access to that. And I think everyone should be free to actually, ask and request. And if we are able to help with specific templates or specific tools, etc., we will be doing that during the course of the program.
Okay, thank you.
But we do have Asisa has actually does have a website set up that we will share as well, which is Smart About Money, where you have those actual live templates on there for the different financial tools, etc. For loan calculations, compound interest, etc. That could help with that. So we'll definitely share the right resources with you. Maybe we can just coordinate with Zanele and and see exactly what other tools your members might need, or that we can actually direct you towards as well.
Thank you.
So now we're going to move on from budgeting and the other aspects and look at personal money versus business money. So, I mean, we're dealing with business, all of you have your own business, etc. And one of the biggest failings of any small business, and this is not only limited to small businesses, right? It can be tracked to the unwillingness and the inability of that business owner to actually separate their business income from their personal income. I mean, a number of times I've dealt with entrepreneurs, and it's a case of, the business is not making money, it's not successful, etc. And then when you drill down, you actually have things, household expenses coming out of the business account, school fees for the children coming out of the business account, etc. And what that does is it actually prevents you from properly assessing the potential and the sustainability of your business. It also prevents you as an individual, and it actually hinders the way you budget on your personal finances. All right, so it happens, and sometimes it's actually an unconscious bias because it's your business and it's seen as your money. I mean, how many of you, from your business dealings when you've started your business, or even now, actually unconsciously, if you need something, it comes out of the business? You can raise your hands, you can comment, etc. Has anyone ever experienced that challenge? No? If you've experienced it, raise your hands. I won't put you on the spot. Okay, we have one brave person that's experienced it. 2. Okay, we have more. So that actually becomes a common problem. So how do we navigate that? How do we actually prevent that? It's actually about raising awareness. All right. Okay. We have Glenrose Lindiwe, who borrows money or takes loans from the business. It's actually a very common practice, right? But it's how do we instill that discipline and actually manage that better? Because this is a very common challenge that a lot of SMMEs and business people find with regards to this, all right? Is that when you're a business owner, the first thing you need to do is separate where your cash comes into. Where does your personal money come into? Where does your business money come into? Separate bank accounts if possible. Sometimes it's difficult. And in order to do that, when you have separate bank accounts, is you need to start paying yourself a salary. You can't say, I'm going to take the profit from the business. What salary are you planning to pay yourself? Is it 5,000? Is it 10,000? Can the business afford it? Because like any business, whether you're employed by someone or whether you have your own business, you need to ensure that whatever you pay yourself makes it affordable for the business to sustain itself, right? You can't just pay yourself the total profit and take out. So you need to actually decide based on your earnings, based on your income, based on your profit or your expenses, etc. What salary are you taking from the business? And it needs to be consistent and it needs to be disciplined and deliberate. All right. So each time that you actually receive money for the business, you need to consciously state, it's not mine, it is the business's. If ABC Trading is your business, even if it's going into your personal account, if you're not registered, or if you're a sole proprietor, or if it's, if you're the sole owner of the business, it's not my money, it's not Kuvi's money. It actually is ABC Trading's money. All right. And then with your personal income, you've got your salary. How much are you pulling on a monthly basis out of that business? And what are you doing with it? So this is where your personal budget comes into play. If you need 2,000 rands or 5,000 rands on a personal aspect, then you need to know that that's what you need to make as a salary. And that feeds back into your business, where your business needs to be able to make enough income to afford to pay you that money. All right. So do you see how you need to close the loop, where it's not a case of taking all the profits out, it's actually investing in the business so the business can actually generate more cash. So if you look at the difference between your personal income, it's your salary, your grant, your stipend, any money from cash, from family, anything from that personal side, and your business income is, what are you selling? Your products, your services, your clients paying you. Okay. If you've invested something as a business, have you received that, business loans or grants, etc. So where it's possible, ideally you should have separate accounts, but where it's not possible, you need to track. And I think somebody mentioned as well, is the simplest way of tracking is pen and paper. If you don't have fancy spreadsheets, etc., use a pen and paper, but don't use pieces of paper. Get a book. So all your information is in one place. It's easily accessible. So you actually know. So somebody mentioned that they take a loan from the business, but keep track of it, because then it's noted as a loan. So when you're going to apply for finance for your business, you can actually submit all that information to an accountant or to the relevant, person that's helping you develop your business financials, and actually allocate for that properly when they're doing your finances. So these are the tips that we've already gone through. First prize, separate bank accounts. So you transfer your salary into your personal bank account. Okay. Keeping documents, which we've gone through. You keep your receipts separately. You're doing shopping. You don't take out your business card to actually pay for your groceries. You need to know, and you need to be able to be disciplined about it. You separate your budgets. Personal budget, this is what I need, and that comes from my salary. Business budget, this is my overheads, this is my rent, this is what I need for telephone. And it's not for my personal calls, it's actually allocated to the business, right? Transport is the same. What transport costs are for the business and operational aspect versus what is your personal transport costs. It's not going on holiday on the weekend or, things like that. And also, you need to actually keep track for tax purposes. We file separate tax filings to SARS as an individual and as a business. And when you start messing around with that, it actually becomes very difficult to split it. And there's potential to get into trouble with SARS because we're not accounting for things properly. There's also potential that you might end up owing SARS more money because you haven't allocated properly. Okay. And again, keep track of any shared expenses. And if you use, and the same applies of whether you take a loan from your business that applies that when if you actually provide your business with a loan from your personal finances, keep track of it. Okay, because it's only fair that if you've actually loaned the business 10,000 or 15,000 to make a purchase, to buy stock, you know, etc., you need to keep track of it and repay yourself the loan, and see how that actually can be monitored and drawn down, you know, without impacting the sustainability of the business. Rent if you operate from home. So this is a commonality with regards to COVID, right? So how do you calculate your rent? And this is very specific when it comes to SARS and when you're allocating the space that you can actually claim for in terms of rental for your business. All right, so the example they give is if you pay 10,000 rands a month, right? And the size of your home is 200 square meters. It's how much is used for business. Don't assume it's half. So the example says half of the space, but you need to be as accurate as possible from a SaaS perspective when you're actually doing your filing. Okay, because you're not going to count your kitchen as part of your rental for the business if you only use it once a day to make a cup of tea. You know, it's where you're actually working. It usually works out, depending on the size of home, around 25-30% of the space, you know, if you have a specific home office, etc. And then you actually look and see, okay, this is how much of rent the business needs to pay. And that is separate to salary, it's separate to anything else, and the business pays for that. Okay, and what should the business pay you? So does it take half the electricity or more than that? Are you sitting with your, I mean, we have all connectivity issues, etc., right? But if you're working from home, it's probably 80% if you have a small family, etc., of your data costs, if you have unlimited or if you have contracts, etc., that go through there. So actually look and be realistic about what the costs are and actually allocate that under your business expense. All right, does that make sense? Does anybody have a challenge with regards to how much of rent you need to pay, the business needs to pay you for actually being operating from home? Has anybody experienced that?
Most of us are business owners.
Yes.
So the challenge would be the tax implications. If you get rent from your business or from anyone else, if you're renting, there are tax implications. So now,
yes.
if you can touch on the tax implications in terms of the rentals, if you're renting from your own business, then what is it? And also lately that now we have the load shedding. How do we then, if you were to drive to the office and you spend a lot of diesel because the robots are not working, so the time it takes now, it's longer than the normal time you would if there was no load shedding. Is there anything that has been taken into consideration in terms of rebates from SARS or whoever? Because those are the small things that we take for granted now. Driving to work would take you 30 minutes more than, because now you have to wait long on the robots when they are not working or anyway. So everything is slow. Yeah.
So I'm not familiar of whether SARS is actually put out anything to consider load shedding, but I know for COVID, for work from home, SARS has issued specific direction with regards to what you can claim as an individual for working from home. But this is when you're working for a company. Okay. I think the best way to structure it is whoever does your personal taxes would have a better indication, because everybody utilizes that differently, you know, and look and see, okay, how do we actually navigate that? Because you're correct, because it's seen as a source of income that if you're paying yourself rent, okay, versus if you're paying electricity, if you're paying certain other things. And I think the best person to provide that advice would be a tax consultant. We unfortunately are not, we're not able to provide that type of advice, etc. But we can give you direction as to what tools can be used, and we can actually speak to the financial planner. And I'm not sure if we have a specific tax consultant coming in on these series of webinars. And I know we have it on our other webinars. But what we can do, Delisile, is we can actually, we have the list of questions, and we can actually find the right tools and find the right guidance and actually share that during the course of this month on the Facebook page, etc., so that it actually directs you either to the correct platform or provides you with the tools, provides you and the members with the tools you need. Would that be acceptable?
Yes.
Yeah, because we're very careful to navigate the fact that we cannot give advice on this. So we can, yeah. So Daph said that the financial planner that's coming through, she'll actually just check if they can answer any specific questions with regards to tax as well. Okay, all right. So this is a very interesting analogy, okay? And it's using a bucket system where there's only water coming in from the top, okay? And this is comparing it to your income. So however fast the water flows, or how big the hole is in the bucket, or how many holes you have in the bucket, determines how much of cash you're left with. Okay, so you can open that tap like as wide as possible, but if you have 50 holes in the bucket, that means your expenses, etc., you're not going to retain much water. All right, but if you start plugging the holes, that means you actually have more water to use. That means you have more cash available to actually use. All right, and it's the same whether it's your personal income, you increase your personal income and you stop, you know, you stop at the holes, you stop your expenses, you actually start decreasing, etc. That means you have more disposable cash. You're able to save more, you're able to invest, etc., etc. Whereas a lot of people, what happens by default, as soon as you have an influx of cash, guess what happens? Your expenses increase proportionally. So you never save, or you never have enough money. All right, and that's a common situation because we're not, you know, our budget seems to change based on the income, and that's inaccurate. Our budget should be navigated based on our needs and wants, right? And looking at what we need to save and planning for our future as well. So that's what happens when we don't actually manage our expenses properly and actually start saying, okay, we're bringing in 10,000 rands, our expenses need to be less than 10,000 rands. If it's more, it's a red flag, and guess what? We need to either spend less or we need to make more money. Okay, and with the business, your cash flow is key. So this touches on business aspect, right? Because if you don't have enough cash, you can't utilize opportunities. You can't capitalize on opportunities. You're not able to buy, you know, if you're in a retail business, etc., you're not be able to buy stock in, you know, in bulk and actually get savings over there. You're not planning, you know, worst case scenario. I mean, in terms of COVID, I think we touched on it earlier, where the lack of savings has actually impacted a lot of individuals on a personal level, but also on a business level. And how do we navigate that? It's actually understanding your budget, keeping to your budget, but also putting that savings component in place. What do you need as an emergency fund in your personal and business life in order to sustain yourself? You know, what period are we looking at? I mean, experts say 3 months. You know, some people who are more risk adverse say 6 months, or, you know, 9 months or whatever, but it actually depends on you and what you're able to save and how much you can save in order to get that, you know, 3 months worth of emergency cash. And it's also being disciplined enough to say, this cash is an emergency savings. It's not there for when I want to buy a birthday present. You know, it's not there for when I want to do something lavish within the business. It actually is emergency, and it actually is used under certain conditions. And it's actually putting a policy in place that you follow. And what you could do is, if you struggle with it, then get someone else to hold you to account. You know, to say, hey, on the emergency policy, I need help on this. I need to make sure that this is the only time I can actually spend the cash. And there needs to be certain conditions in place before I'm able to touch the cash. And what that does is it actually creates a discipline, but it also ensures that you start earning and creating more money so that you can actually expand that, you know, the cash flow into that bucket, and it actually helps you out. I wanted to thank everybody for joining us. Hopefully our load shedding woes and challenges will be resolved by next week, as Eskom promises. You can hope. across the board, and then we'd have the link sorted out, and we'd have our presenters being here full time, being able to present. So, you know, we don't have ad hoc people stepping in, etc. on this. But thank you so much for your time, and looking forward to interacting with everybody on the Facebook group, and also we'll be loading a lot of the content, etc., on our website as well, so that you have access with it, and we'll be able to share all the tools, you know, or make reference to tools and templates, etc., as needed across during the period. Okay, good. Clive, I think we're good to wrap up. Hey, all right, cool. Thanks, everybody.
Thank you.
Thank you so much.
Thank you.
Okay, brilliant. Bye.
Bye.
See everybody again next week.